All right, we're live. So I just wanted to jump on here and, give a quick tips about how to learn how to trade Forex and particularly trading Forex in the New York session. Because every session has its own schedule and the markets tend to do certain things in certain sessions, but I'm gonna go over that. The number one thing that you want to know when it comes to trading Forex is to know the structure of the market. And what I mean by that is that Forex and trading, you can use this for all markets, crypto, stocks, um, what's the other one, commodities, indexes, and in Forex, all the markets has is a structure. And to kind of go over that, this is what that structure looks like. So when there's an uptrend, because the markets move in trend, there's a trend in the market. And the number one key when it comes to trend is to always remember this: trend is gravity. So the trend is the gravity of the market. So when you have a trend, the market is going to continually be, ruled by that trend. So in an uptrend, you have a series of higher highs followed by a higher low because this low is higher than this low, and followed by a higher high because this high is higher than this high, followed by a lower low, followed by a higher high. And it can be, this many higher highs, or it can continue and keep going forward like this. It can just keep going. Now, when it comes to trading, the number one rule that everybody teaches is buy low and sell high. But how do you truly do that? And especially if you're new, that can be foreign to you. So when you're trading, you always got to know this structure. You always got to know the trend. You always got to know the structure. If you can figure out those two things, you can always have an idea of what to do next in any given market. So when you trade, you're not trading with confusion. So when there's so in an uptrend, higher high, higher low, as long as the low doesn't cross, as long as the low doesn't cross this low. So as long as this isn't broken, so it can do this, or it can go down here. As long as it's a higher low still, or even an even low, it's still a uptrend. Now, if it goes down here, and say it goes down here, then you might have a downtrend and something like this happens. So something like that happens. But in an uptrend, as long as the price, that second low doesn't go below here, it's still an uptrend. So it could be here, it could be there, it could be there. But as long as it's a higher low anywhere in this area, it's valid. And it continues forward. You want it to be a higher low. Same thing here. As long as this low hasn't broken this low, as long as 4 hasn't went lower than 2, if it goes down here, then maybe it's still not an uptrend. But as long as it's anywhere between this area and it continues forward, that uptrend is still valid. So that's how you look at an uptrend. For a downtrend, it's the same thing, but just the opposite. As long as, for example, this doesn't go above here, it's still a downtrend. It could be here. That could still be considered a downtrend. It could be there, still be a downtrend. It could be all the way up here, still be considered a downtrend. Because this is the measurement. So this is the metric or the standard. So as long as it's within this range, structure still holds. So when you're looking at the market, say the market's here, you're trying to sell in this term. So you're looking for this number 2 area. You're looking for an area like this to sell, or you're looking for an area like that to sell on. And that's how you basically trade the markets. Now, the trick is, how do you know if the market is going to just go here and go down, or is it going to go all the way up here and go down? And that's where you have something called price levels. So when you have price levels in the market, price levels like floor and ceiling. So if you're jumping and you hit your head on the ceiling, you're going to bounce down. If you fall down and you fall on the floor, you're going to be supported. So, for example, you know, this could be considered a ceiling because price had bounced and price that went up, jumped, bounced off of here and went down. So that could be considered a ceiling. So when that becomes a new opportunity for it to be a ceiling or a resistance, is what they call it in trading, resistance, then there's a possibility is when price goes back and hits this, that it could be a possibility that there's enough interest in the market at this area, because that's what actually moves the price is actual orders, not boxes or lines or trend lines and all that stuff. Is actual sellers, that there's enough sellers interested in this area to move the price down. So that's what you're looking at when you're trying to trade. As long as you're looking at that, then you can, win in the markets. Same thing here. So let me kind of even this out. So for example, this right here would be considered another level. That can be considered another level. So when price comes back, breaks this level, price likes to retest the level that it just broke. And when it retests the level, it could be enough interest, because there was enough interest to make this bounce happen. There was enough interest to make that bounce happen. There was enough interest to make that bounce happen. So by trend and by history, theoretically, there could be enough interest to make this stop here instead of going up here, because there's a price level here. So if you understand that concept in the market, you'll have an idea of what to do. So now let's look at a live market. So first thing I like to do is always start at the 4-hour. So let me do that. And we can keep that up there actually. I always start at the 4-hour. Now, if I try to show you a little bit about what's happened, use that same market structure, it doesn't look as clean as this diagram. But what you're looking for, you're not looking for, necessarily the lines, you're looking for the points. So if I was to label the points out, and start here, you got your highest high, you got your next low, got your next high, and then it kept going low, there's another low. So low here, then it kept going high, and this is your highest point before it started going back lower again. And now you're here. That's the lowest point. Now, you see how there's other potential candidates. Like I could have possibly put something there, or put something there, put something there. But the reason I didn't the reason I didn't is because in the markets, you're looking for the main point. So in the markets, what you're looking for is the high points and the low points of each market. So if I was to do this, then I'll be looking at here, 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 here. See how it doesn't look as clean as this? So when you're learning to trade, everybody's going to show you this, but they're not going to turn around and do this, because I guess it's harder to teach, so they shy away from doing it. But you see that the markets are never going to be as clean as your diagrams that you look up on Google, or getting your basic training when it comes to trading. So now that I know that it's a downtrend overall, I'm on the 4-hour. I know it's a downtrend on the 4-hour. I like to go down to the 1-hour and see if the same thing is happening. So on the 1 hour, you know, I can do something like here and just kind of go like this right here. So that's your lowest point. So this is 4, this is 5. So as long as price didn't go above 4, as long as price didn't go above 4, then it's still a downtrend. So price has to reach above this level. See, it tested it over there and see how it bounced off. It tested it over there. But as long as price, you know, as long as the next high doesn't breach the high of 4, it's still a downtrend because you're going based off the structure. So when you're looking at it, this is still a downtrend because a downtrend is lower lows and lower highs. So this is still a downtrend. So now I'm looking for another high. And theoretically, another high is going to be slightly below the next low. I mean, slightly below the last high. So if I'm looking here, this was the last high. One thing that I like to do is now that I know what my last high is, because this is a downtrend, I'm looking for the last high. I like to see what price levels, there's 2 things I like to do. I like to see what price levels are in between the last high and the last low. Because it's a downtrend, I'm looking for the next high. So let me actually do this real quick. So one way to find a price level, to make it real simple for you, find a price level in the market. A price level, let me actually type this out. A price level is an area in the market, that basically price respects off of. So if you have an area in the market where a price respects off of and multiple times, then you have a strong price area. So where was I? So it's an area in the market price respects multiple times. So now for somebody new, it may be hard to find that area. You know, it may be hard to find that area. But what you do to simplify it for you, don't look at the candles. You would look at the line charts. And what you want to do, let me actually take that off real quick. So what you want to do is find an area where there's a lot of, I guess, pivots or turnarounds. So if I'm looking, and what I like to, and the easiest way to kind of do this is you go and you take a line. Where are they? Regular horizontal line. Place it on the chart, and you kind of see where where price likes to line up at. So right in this area, that would be considered a price point. Reason being is because you have this area here, got that one, got that, got that, got this over here. And it doesn't have to be exact because this is the close of price. And when you understand candles, you know that candles don't necessarily close at its highest or lowest point. It can close in the middle of the price action. So you're just looking for the area. So you got, how many is this? So 1, 2, 3, 4, 5, 6, 7, 8. 8 is a really good price level. So you got a price level there. So I'm going to do is go back to my box. And because it's not necessarily an exact price level is a zone. So you want to kind of illustrate that by using a box. And then when I go back to candles, You see how that just lines up? That's how you find a price level. Now, right now, price is having a reaction off of a price level. You know, it's still a downtrend. You're looking for, the next lowest high. So this area here could potentially be a place where you would want to place a sell. I'm not going to call any trades on, this Facebook Live, because this is really just to teach people how to look at the markets. But, that would be a potential nice area for a sell. So that's one way you can determine what your next area is price level. The second way would be a Fibonacci. And a Fibonacci is just basically a measurement scale in price. And the easiest way I can explain Fibonacci for someone that's new, think of it like if you're like a Black Friday sale. You may not have wanted to buy something when it was priced at 100%. Oh, let me do this measurement scale. But you may not have wanted to buy something that was priced at 100%. But say someone said, hey, it's 60% off, but you still think that that area, that product is valuable, even at 60% off, you're going to be more inclined to buy that item. So the second thing that I like to use is the Fibonacci. When you're doing Fibonacci, we're in a downtrend. So the Fibonacci, the downtrend, you're going to click at the high point and you're going to go down to the next relevant low point and measure that out. So now you have, and let me do the regular one. There. Show you what it looks like on regular charts. So now you have, areas in price where people might be inclined to buy. And the Fibonacci is a form of support and resistance when used correctly. So now I can look at each area and be like, okay, what's a good price level? Is this 23.6, is that a good price level? For the most part, it is. So you can mark that up as a price level. This 50, that's already marked up. See how that lines up beforehand? Like I already had that line there, and see how the 50% lined up beforehand? Then I would keep going up. I would keep going up, and did it line up back? But let me put this back. So I would keep going up. See, it's 38.2. See, there's not price. Price really isn't respecting this 38.2. So I could take, just not look at it anymore like that and just delete it. Or I could just not pay attention to it, even though it's still there as a line. I keep going up, 61.8. The 61.8 have a good price respect. If I go back and do it the line chart way, I could put a line right there at 61.8. And we got, let's see how many respects we got. We got 1, 2, 3, 4, 5, 6. 6 is a good number. That's a lot of price respect. So that would be a good level for a zone. So that'd be a good level for a zone. And I think that would be good enough. You don't want to do too much. Yeah, you can say that this 78.6 is a good zone. You could say that too. It has what, 1, 2, 3, 4, but it's a weaker zone. It only has 4 price respects. 1, 2, 3, 4. Yeah, it only has 4 price respects. So you see that the 8 from the 50 and the 6 price respects on the 61.8. The higher the more respect in the area, the better the zone. So those are my 2 main zones. This has 1, 2, 3, 4, 5, 6. So that one has a better zone. So my weakest zone in this area is 78.6. So I'm not going to worry about that. I want to look at my 2 price zones. And right now, this 23.6 zone, this zone isn't relevant. So now I know that my 2 relevant price zones are where, put this back, are where the 50 and the 61.8 is. So now I have an area where I want to sell. And as simple as that. So you find your structure, you find your structure, and then you look for your next high. So in a downtrend, I'm looking for the next high. In an uptrend, I'm going to be looking for the next zone. Let me see if I can find an uptrend. I think EuroCAD is in an uptrend. Yeah, there we go. So EuroCAD's in an uptrend. So if I go back out, I can do something like this where I see the market, and this one's not going to be as clean for sure. But it's still in an uptrend. That's an uptrend. Even though it doesn't look perfect, it doesn't have to be like this perfect thing like this. It can be a little bit messy, come down here, but the uptrend's still true. It's still an uptrend. So that's the 4 hour. Now I'm gonna go down to the 1 hour. I know what my major trend is up. So my major trend is up on the 4 hour. And then on the 1 hour, let's do this. On the 1 hour, 1, 2, there's no low. There's a low there. So as long as price doesn't breach the 4, it's still an uptrend. But you see in here, you got all of this. Price had breached not only just breached the 4, this last low, it closed and created a little pattern underneath it. So that could be a change in trend because the last low was broken. Because an uptrend is a series of higher highs and higher lows. But this created a lower low, so it's no longer an uptrend. That's what's happening right here. So now I got to look and look at my areas. So I got here, this is my last high. That's my last low. So what I'm going to do here, that's my last high, my last low. I'm going to look for the zones in this area. So what do? I go to my line chart, and then I get my horizontal line. And for me, I kind of do this a lot, so I see it pretty fast, but I place my line and I can, see where the price lines up and respects the most. And it's generally in this area. So if I was to count the number of respects, you got 1, 2, 3, 4, and potentially 5. So let's just count these as 4. There's no other area in this line. So this is my last high, this is my last low. You're looking for the price areas in there. Your second area would be here. You got 1, 2, 3, 4, 5, 6. So that's my strongest zone in the area because this has 4 and that has 6. So there's 4. So this is 6 respects here. So if I was to give it like a point system, this is a 6. This area is a 6. And then this area is a 4. This area is a 4. So a 6 is greater than 4. So that's my price. Those are my 2 strongest zones. Those are my 2 strongest zones. There's 6 price respects here. There's 1, 2, 3, 4 price respects there. So these are the 2 zones we're going to pay the most attention to. Those are the 2 most relevant zones within this line. Because last high, last low, you're caring about what's going to be the next high because it's a downtrend. It's a potential downtrend. So like a potential change of trend. So if I'm looking for a sell in this area, it's going to be off of one of these levels. Now, if I go back to my candle so I can see it, price is respected off of this level. So it could potentially be a sell. But let's say you're cautious and you really don't want to sell off the first change in direction, you know, which is understandable, because that can be a confusing entry if you don't know what you're doing. One thing you can do is you can wait for price to break the next zone down, retest, and then let it continue to sell. There we go. And let it continue to sell. That could be your two sell options if you're looking for a sell is you can sell here where it's at now. You could potentially sell there. Or if you want to be cautious, you can wait for it to break the strongest zone. And once it breaks the strongest zone and retests the strongest zone in the area of price, then that's where you're going to get your safest entry. So this would be a little bit of a riskier entry. This would be the safe entry, this break and retest, and you can sell further down. So, you know, this is how you look at the markets. Now to go over the, I guess, the sessions. Each session has a schedule. So you got Asian session, you got London session, you got New York session. Every session, the Forex markets, you know, is pretty much planned out, and it's a pattern to each part of the day in the market. So your Asian session, that's going to be, say, 4 p.m. Central Time. It's about a 9-hour period. So 4 p.m. Central Time to 1 a.m. Central Time. It ends at 1 a.m. Central Time. So that's Asian session. London session, it's going to be 1 a.m. Central Time to 10 or 9. Yeah, it's 10 a.m. Central Time. So that's the 9-hour session there. And then for New York session, it kind of overlaps, because New York session, it is 8 a.m. So it's 8 a.m. Central Time. Trying to see how it works with daylight saving times. I think right now it's 8 a.m. Central Time. Let me see real quick. Sessions. There we go. New York session starts here. New York's at 7 a.m. right now. Okay. So New York's at 7 a.m. Central Standard Time to 4 p.m. CST. You know, daylight saving times can kind of shift that a little bit sometimes, that opening time. So those are your sessions for the market. Now, here's what price does during the session. So I go here. So during Asian session, especially when you're dealing with United States dollar pairs, like any pair with USD or any pair with Euro, this is generally what happens. So during Asian session, price likes to consolidate like that, because both the London, most of the money is within the American sector and the European sector. Most of the spending money in Forex, and then, across the world. So with it only being the Asians that are trading, for the most part, as far as from an institutional standpoint, it's not that much. So what happens is it usually consolidates like that during Asian session. So you have a little bit of consolidation. Then during London session, what happens is it breaks out. It usually breaks out, gives a slight retest, and continues forward into London session. Then for New York session, New York is going to either continue the trend that London is set or reverse from it. So New York session is like the session the market chooses which direction it's going to continue going, or if it's going to flip. So New York session to either do this. It's option 1 for New York session. It's option 1, or option 2 for New York session is it's going to do this. So it's going to retest and continue like that. So this would be New York session, option 1. A lot of times it likes to reverse, especially on Wednesdays. And then option 2 usually happens a lot Tuesdays, Mondays and Tuesdays. Option 2, it continues. And if you look, and I'll show you a couple of examples of this, and then that'll be the end of this lesson. So it's either going to reverse or continue what London has done. That's what normally happens. So if I go here, and what I'm going to do, I'm going to actually use an indicator to show us when the sessions are, just to make it easier. So blue is Asian session, green is London session. For right now, this yellow is the time London session and New York session is going on. So that's when New York session starts. And this is when the red is only when New York session is going on. So let's start here. So you see for New York, for Asian session, market consolidated. In London session, it did exactly what I said. It broke out and gave a continuation. Broke out, retest, gave continuation. And this time on New York session continued in that direction. The next Asian session was a bigger range, but still a consolidation. London session, it broke out of that consolidation. London session broke out of that consolidation, and this was a slower New York. It kind of continued with a consolidated. New York can do that too. It doesn't consolidate that much. But let's go to another pair. Let's go to another pair. Just so you can see it's on multiple different pairs. Just drawings. So let's start here. Asian session, consolidated. London session, it broke out at consolidation. Then New York session, it reversed. It did the reversal. This was a busier Asian session, had a bigger range, but still London broke out of that range. And then this one, this New York session, consolidated. Asian session had a range. It just keeps repeating. Asian session had a range. London session broke out of the range. New York session reversed it. Now, this one was a rare day where you had a market move for Asian session. This was probably news, but after the news happened, it consolidated. London session, it broke out of that consolidation. New York session, it reversed. New York session, it reversed and went back down. It keeps repeating itself. Asian session, range. London session broke out of that range. And this time, New York session continued in the direction it broke out from. It just keeps going. Range, break out of the range. The Forex market repeats itself over and over again. Breaks out of the range, and New York session, it reversed. This one, market wasn't the market when Asian session doesn't have a range, it kind of throws things off. So Asian session didn't have a range. It actually continued the trend. So when Asian session does that, the rare times it does, it throws off the rest of the schedule. Because London session, it consolidated, and New York session, it consolidated. So when Asian session does that, then you know that the rest of the schedule is not going to be the same. But when Asian session has the range, where ranges consolidates like here, that schedule is going to continue. So you have an Asian consolidation. So that's going to follow with the London breakout. And then that's going to follow with the New York reversal. If you see this, you can literally take advantage of the Forex market, because the Forex market repeats itself over and over again. It repeats itself. And a lot of people think it's random. I can go to another pair and let's pick one at random. CAD yen. So what we're looking for now, this has a yen pair. So a lot of times you might see some movement in Asian session because yen is Japanese. So that's Asian. But for the most part, consolidation, broke out of range in London session. New York decided to continue. You have Asian wasn't in a range, so that means either New York or London is going to consolidate. Anytime Asian has a big move like that, either New York or London is going to consolidate. So London but it's still for the most part broke out of that range. Right, the schedule for the most part repeats itself over and over again. The only thing that really messes with the schedule of Forex is when during the Asian market between 4 and 12 p.m., 4 p.m. to 12 a.m., if it has a major move like that where it just goes in one direction. But if you see this consolidation happens, now this is probably getting close to Christmas, so let's not count that. Christmas, it's holiday, so the market doesn't move normal. So let's go back some. Start here, December 1st. So Asian consolidation, London breaks out of range, New York reverses. New York reverses. Asian consolidation. Just keeps repeating itself. I'm picking pairs at random. London breakout. Like, this is like the sauce right here. Like, you're not going to learn this from a basic Forex course. I actually learned this from people, high level professional traders. And every little Forex course that I found, the little cheap ones or YouTube ones, because that's how I tried to start, they didn't teach you this. Asian consolidation, London breakout. New York had a slight continuation, but it just keeps repeating itself. So if you understand that, then you know what to do. Between the two things that I taught you, knowing the schedule of the market and knowing the structure of the market, if you can combine those two things, you could be highly profitable. So hopefully you got some value from this. And, the new year is starting, so I know everybody has goals. Take the time to really implement on the action plan. Don't just set goals, set actions and do them. And that's how you keep your New Year's resolutions from just being resolutions. Y'all have a good one.